Fed Chair Janet Yellen testifying in front of the Joint Committee this morning in D.C. No specific time frame on when the Fed will raise interest rates. She did say economic growth is rebounding in the second quarter on increased consumer spending. Well, with more on her comments, we bring in James Rickards. He is a hedge fund manager. He is also the author of The Death of Money, which is a fantastic read. If you have not picked it up, I can't help saying that, Jim. I'm a big fan of your books. What did you hear when you were listening to the Fed chair this morning?
Well, you know, Deidre, central bankers have struggled for decades to be as boring as possible, but I think this was a new high. Janet Yellen actually...
A high for boring.
A high for boring, which
Okay.
central bankers want. They've perfected this technique. I was actually listening to it in my car on the way driving in, and it's a little bit dangerous because you could fall asleep at the wheel listening to this.
Come on, Jim.
She really made no news, but of course that was her goal.
That's her intention.
And the way I would analyze it, Deidre, is if you believe the Fed forecast, then they're going to taper through the remainder of the year, finish the taper by November or December. There'll be a period of time, then they'll gradually normalize rates and reduce the balance sheet in 2015. The problem is the Fed has the worst forecasting record in economics. There's no reason to believe the Fed forecast. And by the way, most of Wall Street has a similar forecast. Why? Because they're all ex-Fed economists using Fed models. So now these are the same people who have been wrong 5 years in a row.
So, Jim, we know what they say is going to
Correct.
happen. What do you think is going to happen?
The Fed has tapered into weakness by their own lights. That's not just opinion. When you look at inflation, Janet Yellen acknowledges, you know, there's a danger of deflation. We have disinflation with danger of deflation. The employment situation is dismal. We all know what's happening to the unemployment rate, but the labor force participation fell off a cliff. And that's
right. In fact, just to stop there on that point, because that just means that people are just simply giving up looking for work. I think it's at its lowest level since the Carter administration in the 70s.
Correct. And Yellen is guided by an economist named Levin at the Boston Fed. And he makes the point, I think he's correct, that the inertia of getting someone back into the labor force is much greater than getting an unemployed person to take a job. So when you
because all the necessary skills have completely changed. I mean, we just had David Tisch here of Box Group and Techstars New York, and basically the U.S. needs more programmers, more engineers. That's not something that if you were working in one kind of job, you can just like a Lego piece snap yourself into.
Right. Even good software gets, you know, they use the phrase gets rusty. You know, you have to update it, and you have to update those skills continually. So if I'm unemployed, I'm kind of job ready. But if I'm out of the labor force, I'm on the couch watching basketball. And that's a much higher bar in terms of monetary ease. So everything about this says that the economy, you know, productivity fell off a cliff today. That was announced this morning. So all the indications are bad. You know what happened to GDP? It looks like the revision will be negative, so we'll have negative growth in the first quarter. So all these indications indicate more ease. But Bernanke tied Yellen's hands. This is a very hawkish board of governors. They have 3 vacancies at the moment, so the influence is overweighted to the regional Reserve Bank presidents because we're missing 3 governors. Now, if you get Lael Brainerd and Stan Fischer, actually, this may be a much more dovish board in 2015. So if the data comes in bad, they may pause the taper in July. But if they don't, if they get to September and they're still tapering, they'll see it through. I would expect them to start new asset purchases in 2015.
So, Jim, what is an investor to do that? I mean, what do you do about gold? What do you do about the dollar? Is there any safe place for your money in this kind of environment?
Well, it's pretty clear that the stock market and the housing market are bubbles. These are propped up by zero interest rates. But again, objectively, New York Stock Exchange leverage is at an all-time high. We're seeing you know, the bubbles deflate around the world, not just in the United States, but elsewhere. So I think those are extremely dangerous. Emerging markets are obviously volatile. Cash does a role, believe it or not. Cash does very well in deflation. I would do what Warren Buffett does, which is get out of cash into natural resources and hard assets. He bought a railroad, he bought oil, he bought natural gas. Warren Buffett's a guy who's dumping paper money, getting into hard assets. I think that's good advice for investors.
All right, Jim, stay with me. We're going to come back.